When I look at the dollar yen price action, it's incredible. I mean, this is not just about the communication from the Bank of Japan. This is about poor liquidity. It's about stop losses. And it's probably a lot of CTA, systematic selling in dollar yen. And that's contributed to the magnitude of the move. And it kind of emphasizes that for dollar yen, it's not so much about YCC. Front-end rates, carry, and volatility is paramount. And you've had rates, maybe the possibility of front-end rates going up, and you've had FX volatility going up, which means your vol-adjusted carry has deteriorated dramatically, and this is why we've seen this big move.
And so what happens in the very near term, in the foreseeable future, you think, with the yen, given how hedge funds are positioned right now? And there seems to be a sense that there will be more aggressive bets on the other side, swinging to the other way towards more strength in the currency.
Yeah, look, I mean, our general view has been rates is probably a better play than FX. And I'd say at these levels of dollar yen, definitely rates is a better play than FX. So the BOJ may or may not do something in December, but they'll probably do something by the January meeting. And 10-year JGB yields are still well below 1%. And our view is that ultimately they should be well above 1%. They should be at 1.3% sometime next year. So I think at these levels, risk-reward, rates makes more sense than the yen. For dollar yen itself, there's a lot of risk. I mean, it's not just Japan. You have payrolls, US payrolls, you have US CPI, you have the FOMC, all of that ahead of the Bank of Japan. So I think dollar yen at these levels is a bit more tricky, and rates is probably the clearer expression if you think the BOJ is set to abandon its ultra-loose policy.
Right. We just had a guest from Citi Private Bank talk about how he sees the currency going at 130 sometime next year against the dollar. I mean, that's the kind of yield upside that he sees from the currency alone. So can't you play both? And can't that be a favorable trade?
So our view is a bit different. Even after the news we've had, I think there's still the possibility that dollar yen will remain above 140 for quite some time. And one longer-term structural factor to think about for 2024 is Japan household balance sheet diversification. There's a tax-exempt investment account for Japanese households where the amount allowed in this account is going to increase, and there are going to be some other changes that could potentially incentivize Japanese households to invest more via investment trusts into foreign assets, which means yen selling. So obviously this is not a near-term factor. It doesn't matter so much in December, but I think it'll be very interesting to see what the Japan household flows and their balance sheet looks like in 24.